Mate, so let's jump right in because we've got a lot to unpack today. These new tariffs that just got announced, they've really sent shockwaves through the market. And, it's no surprise why there's so much concern from, investors and everyone involved in supply chains. But if you look at the U.S. stock markets, the reaction was immediate. The Dow Jones, for example, just plummeted at the open. We're talking a 1,500-point drop, which is like over 3.5%. And even by the close of the day, it was still down significantly, around 1,300 core hints, 3%. And the S&P 500 also took a real beating, falling by 4%, which, by the way, puts it firmly into what we call correction territory. That's when you see 10% to 20% drop from a recent high. And it really signals, a pretty substantial shift in how the market feeling. And get this, it even fell back down to its pre-election lows, which, if you think about it, that's like wiping out something like $2 trillion in value. Yeah, it was the worst day for the S&P 500 since way back in September 2022. And the NASDAQ, which, is really heavy on tech companies, well, it wasn't spared either. It declining by 5%. And then you look over at the New York Stock Exchange, and for every single stock that was going up, you had 6 going down. So, it was a pretty widespread downturn across the board. And it wasn't just us here in the U.S. feeling the heat either. European markets, like in Germany, France, and Sweden, may also have pretty steep drops, especially when you consider what might happen if, let's say, a 20% tariff was slapped and everything may ship over to the U.S. And over in Asia, those markets also closed in the red, with some of our closest trading partners and allies, with Japan and South Korea experiencing some notable losses themselves. And then there's small cap companies, the ones in the Russell 2000 index, actually went into what's called a bear market. That index dropped by over 5% just during the trading day. And I get this, it's now fallen by more than 21% from that record high it hit back in November. And, a lot of analysts are saying that things like a slowing economy and those higher interest payments we've been seeing, well, they're particularly rough on the smaller companies, making it harder for them to stay afloat. And it wasn't just the indexes either. When you look broadly, stocks of multinational companies, especially the ones that are, really dependent on imports, well, they also saw some pretty significant declines. Like, for example, Nike, their stock took a 12% hit and Apple's dropped by 9%. And then there's the retail sector that really felt the pressure. Five Below, their stock plummeted a whopping 26%. Dollar Tree fell by 11% and Gap lost 20% of its value. And over in the tech world, Nvidia's stock went down by 7% and Tesla's dipped by 5%. But one case that's particularly interesting, at least to me, is Lululemon. Their shares had a huge drop, over 11%, and it seems pretty clear that this is directly related to the new 46% tariff on imports coming from Vietnam, because that's where they make about 90% of their stuff, while at some other countries like Cambodia, Sri Lanka, Indonesia, and Bangladesh. And another company, Deckers Outdooring, are the folks who make boots. Their shares also took a tumble, down over 14%, and may happen to have a lot of suppliers in Vietnam, 68 to be exact, and 125 over in China, which is worth noting because there are also tariffs of 54% on goods coming from China, in addition to that 46% on Vietnam. And that, of course, also hits a company like Nike, who make like roughly half of their shoes in those two countries. So let's break down these new tariffs a bit. We're seeing them start to get implemented across the board, with some countries starting at a rate of at least 10%. And then on April 5th, the universal 10% baseline tariff is set to kick in for everyone. But here's where it gets interesting. They're actually planning to hit countries that have higher tariffs on U.S. goods with even higher rates, almost like a tit-for-tat kind of thing. And there's been a statement from the current administration that these tariffs actually only represent about half the burden when you factor in existing tariffs, non-monetary barriers, and what they're calling other unfair trade practices by other countries against the U.S. In fact, the White House is claiming that the affected tariff rate on goods coming from China, when you combine these new reciprocal rates with the existing taxes, it actually works out to around 54%. That's significantly higher than what a lot of investors were expecting. Many were anticipating a universal cap somewhere between 10 and 20%. And to add to that, Fitch Ratings, one of the big credit rating agencies, has done some analysis on these combined import duties. And they're estimating that the effective overall tariff rate could be as high as 25%, which, they point out, is the highest it's been in over a century, like 115 years. So yeah, the market's reaction has been pretty dramatic. Some are even calling it the worst case scenario where it comes to tariffs. And because of how unexpected this was, it's led to what's called a risk-off sentiment. Basically, investors are getting spooked and moving away from riskier assets like stocks. Marianne Bartels over at Sanctuary Love, she's been pretty vocal about this. She's suggesting that the S&P 500 could drop even further, maybe another 5 to 10% if it breaks through that 5,500 support level. And she thinks the bottom could be somewhere between 5,200 and 5,400 for the S&P. But then you have Larry Tintorelli from Blue Chip Trend Report. He's got a slightly different take. He was saying that the market probably would have been okay, even gone up, if the tariff had stayed around 10%. But because it's so much higher than everyone expected, it's really increased the chances of the market going down. down. And all this uncertainty has investors scrambling for safety, which is why you see the yield on the 10-year Treasury note going down, because when demand for those bonds goes up, the yield, which is basically how much they return, goes down. So this flight to safety, it's a classic sign that people are losing faith in those riskier assets, like stocks. And on top of that, you have global currencies like the Japanese yen and the euro getting stronger compared to the US dollar, which often happens when investors are worried about the US economy. And it's getting serious because JP Morgan is actually predicting that these new tariffs could push the US into a recession. And the Yale Budget Lab, they've done some number crunching, and they're estimating that all these tariffs, built old and new, could shave almost a full percentage point off US GDP growth this year. And they say it could end up costing the average household something like $3,800 extra. And Fitch Ratings, they're also concerned that these tariffs are going to make a US recession a lot more likely. And they say it could even tie the Federal Reserve's hands, limiting their ability to cut interest rates even further because, of the impact these tariffs could have on the global economic outlook. And beyond the actual impact, there's also been a lot of pushback from analysts about how these tariff rates were even decided. Many are saying the methodology was completely arbitrary and the numbers don't really seem to reflect the actual trade or tariff policies of the countries they're hitting. Apparently, the way the USTR did it was they figured out what tariff levels would be needed to wipe out the trade deficit with every single country, and then they just cut those numbers in half, which has led to some, well, let's just say, some pretty strange tariff rates, like 47% for Madagascar and 49% for Cambodia, just to give you an idea. And it's not just the big drain targets that are being targeted here. It also includes overseas territories of countries like the UK, France, and Australia. And sometimes these territories are actually getting hit with different rates than the mainland. For instance, the Falkland Islands have a 41% tariff. Norfolk Island is actually higher than Australia itself. And the Heard and McDonald Islands, which are uninhabited, somehow hit a 10% tariff. And yeah, it's kind of all over the place, right? And it's interesting because there's actually a bipartisan bill in Congress right now that's trying to take back some control over trade by requiring Congress to vote on any new tariffs, which, kind of suggests that not everyone's on board with how this whole thing is being handled. It's important to remember, even before all this tariff drama started, individual investors were already pretty pessimistic about the market. I mean, we received levels of pessimism that haven't been this high since the depths of the 2009 global financial crisis. And the survey that asked about how people see the stock market performing over the next 6 months, well, they're already showing a lot of negative sentiment, and you can bet that's only gotten worse since these tariffs were announced. And then last but not least, we have this weird situation where, despite all the tension going on in the Middle East, crude oil prices have actually gone down, and most analysts are attributing this to, growing fears of a global economic slowdown, which of course these new tariffs could make even worse by reducing demand for oil. So I think it's pretty clear that these tariffs are a huge can of worms. They have the potential to impact markets, businesses, and, all of us individually in ways that are really hard to predict. And the analysis we've looked at today, it really highlights some serious concerns, that increased volatility in the market, the very real possibility of a recession, and of course the fact that everything is probably going to get more expensive. It really drives home just how interconnected the global economy is and how these kinds of big policy changes can have ripple effects that are felt all over the world. And when you listen to all the different opinions and predictions from the experts, well, it just shows you how much uncertainty there is. I mean, nobody really knows for sure how this is all going to play out in the end. So thank you for spending some time with me today to try and make sense of all this. If you found the diff helpful, please do me a favor and hit that like button and subscribe for more deep dives. Until next time, take care.